Welcome back to Investing Talk Podcast. Today we're tackling a question that seems to be on a lot of minds lately. Is SoundHound AI a good time to buy right now? We've waded through a whole stack of recent analyses, financial reports, market insights, everything we could find on SoundHound AI to really try and unpack its potential and, well, its pitfalls too. Our goal here, like always, is to pull out the most important bits of information, giving you a shortcut to feeling informed without, getting totally overwhelmed. Before we jump in, if you find this conversation useful, please do remember to subscribe, like, and comment. It honestly really helps us out. And hey, if there's a specific company you'd like us to look into down the road, just drop it in the comments below. You can also think about buying us a coffee to support what we do here. Okay, let's get into it. All right, let's unpack this one. SoundHound AI, it's a name that pops up quite a bit, especially in this whole AI boom. But what exactly are they doing that's got everyone talking, and what do the numbers really tell us about their foundation?
Right. So SoundHound is, at its core, a specialist in AI-powered voice recognition. Think about the advanced voice assistants you might interact with.
Okay.
Not just on your phone, maybe, but in your car, or even at a restaurant drive-thru, or calling customer service. That's their space. They build these custom voice AI platforms for different industries. Automotive is big, IoT, customer service.
Gotcha. So B2B focused mostly.
Primarily, yeah.
Yeah.
And when you look at the financials, the revenue side is, well, it's showing that classic hyper-growth story. Our sources put their trailing 12-month revenue somewhere between, say, $131 million and $137 million.
Okay, that's substantial.
It is. But the projections are where it gets really eye-opening for growth investors. They're looking
Yeah.
at maybe $160 million to $178 million for 2025.
Right.
And potentially, as high as $277 million by 2027.
Wow.
Yeah, and this isn't just slow and steady growth. We're talking year-over-year growth rates that have sometimes been over 90%. It points to a compound annual growth rate of roughly 36% through 2027. That's huge.
Definitely. What's driving that?
It's really the strong demand, the undeniable demand for AI and specifically voice tech across pretty much every sector you can think of.
Okay, that revenue growth sounds phenomenal, almost too good to be true sometimes. But, top line growth isn't the whole picture, is it? Often with these high growth tech names, there's a catch. Is SoundHound actually making any money yet, or are they still just pouring fuel on the fire?
You've absolutely hit the nail on the head there. It's a crucial point, and yeah, it's pretty typical for disruptive tech at this stage. Despite that really impressive top-line growth, SoundHound is still unprofitable.
Right.
They reported a net loss of $225 million in the last year. That translates to a negative EPS earnings per share of minus 59 cents.
Oof.
Yeah. So for every share out there, they lost 59 cents. Looking ahead to 2025, analysts are predicting an adjusted EBITDA loss of around $25 million. Now, EBITDA earnings before interest, taxes, depreciation, and amortization that often used to get a clearer view of operational performance for growth companies.
Right. Strips out some of the noise.
Exactly. But even using that adjusted figure, they're still expecting losses.
Yeah.
And the standard GAAP EPS losses that's generally accepted accounting principles, those are actually expected to get worse before they potentially get better. The company's targeting full profitability on an adjusted EBITDA basis by the end of 2025, but actual GAAP profitability, that might be quite a bit further off.
So impressive growth, yes, but still deep in the red. What does that combination mean for their financial health? Are they burning through cash like crazy?
That's the implication, yes. While the revenue growth is fantastic, they are operating at a significant net loss, and they consistently show negative cash flow from their operations. They don't pay dividends, which is normal for a growth company reinvesting everything. But the reports show operating losses quarter after quarter. Now, their debt levels seem manageable relative to their market cap right now, but it's something to watch closely. To avoid having to issue more stock, which dilutes existing shareholders, or take on more debt, they'll likely need to keep up this exceptionally high revenue growth.
So it puts a lot of pressure on them.
Huge pressure. It raises that key question for anyone looking at this. Can they sustain this growth and manage the cash burn effectively enough to reach profitability before, the well runs dry?
Makes perfect sense. And the AI space, it's incredibly competitive. You've got the giants, Google, Amazon, with seemingly endless resources. How does a company like SoundHound carve out its space against them? What's their edge?
Yeah, that's a great question, and it's actually pretty fascinating how they're positioning themselves. They're generally not trying to go head-to-head with, say, Google Assistant or Alexa in the consumer smart speaker market.
Okay.
Instead, their focus is really on those B2B custom solutions. building tailored voice AI for specific businesses. A key advantage seems to be their independence. They aren't tied to one big ecosystem, like Google's or Amazon's.
Ah, so they can be more flexible.
Exactly. They can offer more customizable solutions that fit right into a client's existing systems. Think about their partnership with Ecolec. They're big in drive-through tech.
Right, you mentioned drive-thrus.
Yeah. So that voice AI that understands your complicated coffee order perfectly, there's a decent chance SoundHound's technology is behind that. It lets businesses keep their branding, control their data, things that might be harder with the bigger players.
That makes sense.
But I mean, let's be real. The market is incredibly crowded. Google and Amazon are formidable rivals with huge R&D budgets. So SoundHound's ability to keep differentiating itself, stay ahead technologically, and keep landing these big partnerships, that's going to be absolutely critical for their survival and growth.
Definitely a David versus Goliath situation in some ways. Okay, so focusing on B2B helps. But with this high growth, the intense competition, let's talk valuation, that price tag. How do you even start to figure out what SoundHound AI is worth when it isn't profitable? The usual metrics don't really work, do they?
You've really hit on a core challenge here. You're right. Traditional metrics like the PE ratio, price to earnings, are basically useless when earnings are negative.
Right.
So investors tend to look at the price to sales ratio, or PS. This tells you how much people are willing to pay for each dollar of the company's revenue. It's often used for these high-growth companies that are plowing everything back into the business.
Okay, so what does SoundHound's PS look like?
Well, according to our sources, estimates put it somewhere between 25 and 40 times current sales.
Wow, 25 to 40 times sales.
Yeah. Now, there's an expectation this might drop maybe towards 20 times if revenue doubles. But to give you some context, a more mature, profitable tech company might trade at, say, 5 to 10 times sales.
So it's way above average.
Substantially above average. It clearly reflects the incredibly high growth expectations baked into the stock price. Investors are betting not just on future growth, but on, massive success and market dominance down the line. It's pricing in a lot of optimism.
It really sounds like years of future success are already factored into today's price. That feels risky. Are there other ways to look at its value, or does that PS ratio really tell the main story here?
Well, trying to do a traditional discounted cash flow analysis, or DCF.
Where you project future cash flows.
Exactly. It becomes highly speculative here. Given the ongoing losses and the, frankly, uncertain path to consistent free cash flow, making those projections reliably is just really, really difficult.
So more guesswork than analysis.
Pretty much. And when you compare SoundHound to other AI companies, even its peers, it consistently looks very expensive on that sales basis. It strongly suggests the market is pricing in several years of smooth sailing and hitting all their targets.
Yeah.
That leaves very little room for error.
Yeah, no margin for error at all.
None. Any slip-up, any growth disappointment, any execution hiccup, and a stock value this richly could see a very sharp correction.
Okay, so beyond the fundamentals and that steep valuation, investors also look at technical signals, market sentiment. This is where things can get really interesting, right? Because the charts sometimes tell a different story. What's the buzz? What are the technicals saying about SoundHound AI?
All right, let's look at the chart. As of August 25th, 2025, the price is hovering around $12.35. Now check out its 52-week range, $4.33 on the low end, up to $24.98 on the high end.
Whoa. That is a massive swing.
It tells you everything about the volatility, doesn't it? The market clearly sees this as a high-risk, high-reward situation, reacting very strongly to news and sentiment shifts. Looking closer, near-term, we see technical support around $10.79. That's a level where buyers might step in. And resistance around $12.05 where sellers might take profits. There's also a bigger macro resistance level around $13.33.
Which you said lines up with analyst targets.
Interestingly, yes, it aligns pretty closely with the average analyst price target. Now, technically, the price is just slightly above its 50-day simple moving average, the SMA, which is $11.68, and its 200-day SMA at $11.47. Being above those moving averages is generally seen as positive for the trend.
Okay, what about momentum indicators?
The Relative Strength Index, or RSI, is sitting at 55.91. Remember, below 30 is often seen as oversold, above 70 is overbought. So 55.91 is pretty neutral territory, not screaming buy or sell based on momentum alone.
Buzz. The sense of but.
Well, yeah. The MCD, that's the moving average convergent divergence, another momentum tool, it's actually showing a bearish signal in the short term, even though the longer-term trend signal seems to be pointing upwards. So mixed signals there. Short-term caution, maybe, despite a longer-term uptrend.
And you mentioned high volatility.
Extremely high. The stock's beta is near 2.8. For listeners, a beta measures how much a stock moves relative to the overall market. A beta of 1 means it moves in line with the market. A beta of 2.8 means if the market moves 1%, SoundHound tends to move almost 3% in the same direction.
So big swings are expected.
Absolutely. Significantly higher risk, but also potential for higher reward if things go right. Overall, short-term sentiment looks neutral, but that underlying risk level is always elevated with this one.
That's a really helpful technical picture. High beta, wide range. Definitely not one for conservative investors. What about recent news? And what are the analysts saying overall? Is there a consensus view, or are they all over the place?
The analyst community generally leans positive, but there are definite caveats. The average price target, like we said, is $13.33. That implies maybe a 6% upside from the current price. Some forecasts go a bit higher, maybe $14 for 2025.
So not huge upside according to the average target.
Not massive, no. And while most analysts have a buy rating, it's really important to dig into their reports. Many of them explicitly call out concerns about that steep valuation. We saw one report, I think it was AI Tech Watch, that called the PS ratio egregiously high.
Strong words.
Yeah, suggesting a big pullback risk if growth stumbles even a little. On the positive side, news about partnerships like the Acrolike one for drive thrust definitely helps the growth story by showing continued market traction.
Any insider buying or selling?
Nothing significant reported recently, so no strong signals from executives or major shareholders through their trading activity. Social media buzz, general news sentiment seems pretty neutral overall, although the broader market fear and greed index is sitting at 39
Out of 100.
out of 100, yeah. Below 20 is extreme fear, above 80 is extreme greed. So 39 suggests investors are generally a bit cautious right now, leaning towards fear rather than greed in the broader market. Not necessarily bad, but indicates a lack of strong buying enthusiasm overall.
Okay, so fundamentals show growth but losses. Valuation is sky high. Technicals are mixed with high volatility. We've covered a lot. What does this all boil down to for someone thinking about SoundHound AI? What are the key events, the catalysts that could really move the needle here? And crucially, what are those major risks investors need to keep front and center?
Right, looking ahead, potential catalysts. Short term, the big one is always earnings. Their Q3 2025 report, expected sometime in early August, will be huge. Any beat or miss on revenue, or maybe more importantly, any update on their path to profitability, that could cause a major stock move.
Makes sense.
Also, any new major partnership announcements, especially with big well-known companies, that always helps validate their tech and market position. And just the general mood around AI stocks, positive momentum in the sector, tends to lift SoundHound too.
And longer term?
Longer term, it really depends on how quickly enterprise voice AI adoption accelerates. The bigger that market gets, the more opportunity for SoundHound. There's also always the potential for M&A. Maybe SoundHound buys smaller companies, or maybe a bigger player decides to acquire them to get into the space quickly. And regulations or changes in AI standards could always play a role, for better or worse.
Those are the potential upsides, the tailwinds. But let's flip back to the risks. You've mentioned them throughout, but what are the absolute key dangers investors need to understand?
Yeah, and this is critical. Are investors truly prepared for the potential downside? Stock-specific risks. First, that ongoing unprofitability. It's the elephant in the room. Linked to that is the risk of further equity dilution, issuing more stock to raise cash or taking on more debt. Both can hurt existing shareholders.
Right.
Second, that valuation. It's stretched incredibly thin. It makes the stock hypersensitive to any disappointment in growth or even just negative sentiment shifts. Third, execution risk. They have to manage costs effectively while scaling revenue rapidly without burning through cash too quickly. It's a tough balancing act.
A very fine line to walk.
Exactly. How long can they sustain that burn before the market says enough? Especially if interest rates stay high, then there are broader risks. That high beta, over 2.5, means it's highly vulnerable to any tech market sell-off. If the Nasdaq corrects, SoundHound could fall much harder. Competition from big tech isn't going away. And finally, just the risk that investor sentiment shifts away from these early-stage, unprofitable growth stories. If the market suddenly demands profits now, SoundHound could be in a tough spot.
Okay. This has been incredibly thorough. We've looked at the promise, the growth, the tech, but also the very real peril, the losses, the valuation. To try and pull this all together for our listeners, what's the final investment thesis here, synthesizing everything from the sources?
Based on everything we've looked at, our overall assessment kind of lands at a 5.5 out of 10.
Okay, so just slightly positive, leaning cautious.
Exactly. The rationale is this. You have exceptional revenue growth potential, absolutely, in a hot AI vertical. You have high-profile partnerships that show their tech works and the market wants it. Those are definite strong positives, but they are significantly offset by the persistent unprofitability, the very, very high valuation reflected in that PS ratio, and the high volatility of the stock and the sector. Technical signals are mixed, suggesting maybe some modest short-term upside, but the underlying momentum feels fragile. The bottom line is, as we've said, the stock seems priced for perfection. It's vulnerable.
So, given that 5.5 rating and all the nuance, how should different types of investors think about SoundHound AI? Is it a buy, sell, or hold, or does it depend?
It definitely depends on the investor. For someone looking at short-term trading, well, the high volatility does create opportunities for tactical trades around earnings or news events, but that comes with very high risk, obviously. It's not for everyone.
And for long-term investors?
For long-term investment, it has to be considered a high-risk speculative play. It's really only suitable for investors who have a very strong conviction in SoundHound's specific competitive advantages, their moat, and believe wholeheartedly in their long path to eventual sustainable profitability.
So, for most
But
people,
for most investors, the prudent approach, based on these sources, would probably be to wait and see. Keep it on the watch list, monitor their earnings, look for concrete signs of improving profitability, maybe wait for a clearer line of sight to consistent free cash flow before making a big long-term bet.
so there you have it, our look at SoundHound AI, a company definitely riding that huge wave of AI demand, but also navigating some very choppy waters with profitability and that premium valuation. It really is a classic case study. Exciting potential versus significant undeniable risk. We hope this run-through of the sources has helped give you a clear picture. Now, we're curious, what aspect of SoundHound AI's future growth, or maybe its current valuation, do you think presents the biggest question mark for investors? Let us know your thoughts in the comments. Until next time, stay curious and happy investing.